Well, the first round of lockdowns obviously has had an impact. It was quote-unquote new and unprecedented. I know that word's been really overused, but I think there's no other way to describe it. What we have seen, and that's the encouraging part after the lockdown, and obviously the impact of the year has been significant. But what we saw actually is a strong recovery in footfall and tenant sales, and also rent collections were coming back strongly. 91% of the rents for Q3 were collected. So if the trend is one that is encouraging to us, as we saw clearly that once the malls had reopened, shoppers flocked back to the malls. Was it lower still than it was the year before? Yes, but we saw a significant rise in both tenant sales and footfall as the months after the lockdown evolved. Another element that's clearly now coming in, as I'm sure you've seen in the UK, itself. The lockdown announced on Saturday about p.m. In France, there's going to be a lockdown for another month, although perhaps it may reopen a little earlier than was announced earlier. Anyway, it's not encouraging. This is an unprecedented situation, and I think what we're really trying to do is make sure that we're going to get through the pandemic before there is a virus. And this is also one of the reasons why our reset plan we think was a prudent step to take in light of what is really something that is has come out of the blue and is hard to plan for.
Yep, I must admit that I was tempted to make that stampede to Westfield to stock up on last-minute purchases before the lockdown over the weekend, but I didn't. I resorted to some digital purchases, and that's what we have seen across the board, this acceleration in e-commerce, which means that you can't charge shopkeepers the same as what you did in the past if the overall traffic is going to be impacted. The line in your results suggests that 10 negotiations have been conducted in the background, 72% through the process. Just give us a sense of what those negotiations look like and the type of cut that you're taking on some of the rents.
Yeah, it's constructive. Right? What we're trying to get to is a fair outcome where the pain, so to speak, of the lockdown in the first half is shared between us, with a gearing of more support mostly to the smaller stores and the ones that are affected mostly, entertainment, food and beverage, and the like. What we have seen in terms of tenant negotiation is really focused on how we share the pain. We have not seen a wholesale restructuring of the leases to go to turnover rent only and the like. And I think it's important, especially for the audience in the UK, to realize that the UK system is antiquated and is no longer fit for purpose. It needs to change. In continental Europe, we've always worked towards occupancy cost ratios, but the negotiations with the tenants have not focused on changing the fundamental structure of the leases as we have been in continental Europe for a very long period of time. So the trends with respect to online is actually interesting. What we're seeing is that a number of the new leases we've signed have seen very significant rental uplifts, right? And large stores, welcome retailers that actually bring something to their customers' experience continue to look for larger stores in order to have that brand experience in store, which, by the way, also helps their online presence.
Jaap, your statement this morning said that you realized 0.6 billion euros of asset disposal. That's, of course, part of the 4 billion asset disposal program that you announced as part of your reset plan in September. But there's some real concern that you will actually struggle to make this asset disposal by the end of 2021, as you mentioned. What do you respond to these concerns?
Well, I think the proof of the pudding is ultimately going to be in the eating. Right? We'll continue. It's hard to speculate. We are in discussions with potential buyers on assets, both in the retail and the office side. And so far, those discussions they're ongoing. They're progressing. Will there be some interruption before the end of the year? Entirely possible with respect to retail. But I think what this shows is that the steps we're taking with respect to the reset plan in order to raise capital to strengthen the balance sheet shows it's been a prudent step, and that's what we hope that shareholders will approve on November 10th.